Over more on the persistent unemployment problem in the United States and its impact on the companies, we're joined by Peter Schiff from Connecticut. He is a CEO of Euro Pacific Capital. And here in Washington, D.C., Ryan Clayton, founder of 100 Proof Politics. Gentlemen, thank you very much. Peter, let me start with you. It's hard to talk about the unemployment numbers without also talking about what Ben Bernanke did today as well. Do you think the action that he did today, including the word unlimited firepower, if you will, in terms of quantitative easing, does that help the case to reduce unemployment?
Well, not at all. In fact, it's because of the Fed, because it's resisting the market's attempts to rebalance the economy so that we can grow, so that we can create jobs, is precisely because the Fed has been too easy that we don't have jobs. And so QE3, open-ended QE3, is going to make it more difficult for the economy to create jobs. But maybe more importantly, it's going to make it a lot more difficult for those that have jobs and those that don't, because what it is going to do is create a lot of inflation. And so the cost of food is going to go up, the cost of energy is going to go up, and that's going to make life a lot more difficult, especially for people struggling to get by on unemployment.
Peter, I'm going to get Ryan in on the conversation here. I mean, what Peter is saying is what a lot of Americans are saying, is that this quantitative easing, whether it's 1, 2, or the twist, it's mainly benefiting probably a lot of the larger banks. You're talking about buying up mortgages. Well, the banks are the biggest holders of many of these mortgages. How does middle America, how does the working and middle class benefit from this move from the Federal Reserve?
Well, the Federal Reserve has they have two primary responsibilities: full employment and to keep inflation down. And what they're doing right now is completely devaluing the dollar. So the purchasing power of that dollar you have in your pocket today is going to be worth a lot less because they keep on quantitatively easing. And that's what they're really doing, is taking the money out of your pocket that you've earned and making it buy less products. That's what the gentleman was just talking about with inflation. I don't think that's what we should be doing. I think what we should be doing is stimulating the economy by creating more jobs, whether through the private sector or through a government jobs program.
Now, Bernanke did say in the statement today that one of the issues was creating a sustainable environment so that the jobless rate would continue to decline into the year 2013 and 14 and so on. How much of a responsibility does the Fed have in that, or is it more of the politicians, Ryan?
Well, I think that it falls on both of their hands, but honestly, it falls on our elected leaders most of all. There's an unemployment emergency in this country. There's a foreclosure epidemic, and we're witnessing the disappearance of the great American middle class, and our economy is based really on a balance of supply and demand. Right now, there's just no demand in the economy. There is no supply-side solution to our current problems, We need a demand-side solution. We need Americans with jobs, and businesses need customers with money in their pockets ready to spend it. That's the only thing that's going to kickstart our economy.
Peter, I know you've got something to say here.
Well, I disagree. First of all, demand is unlimited. Americans want everything. The problem is we can't afford it because we don't produce it. What we need is more production. We have an enormous trade deficit. The problem is supply, and our economy can't supply the goods because there's too much government. There's too much regulation. There's too much taxes. There's too much spending. And of course, what we don't really
let me stop you right there. The real problem is that there's not enough spending. There's not enough spending by middle-class consumers.
No, there's too much spending.
There's not enough purchasing power in the economy. There's not people that can walk into local businesses and can buy things. Because when businesses need to sell things,
let's let Peter finish his thought first.
Too much money. Yeah, we're drowning in debt because we spent too much. We have to save. We're not going to have real production until we have more savings, more investment, and the Fed is fighting that. And we don't really want jobs. What we want is the production that comes from good jobs. We don't want government jobs. They make us poorer. They sap the wealth out of the private sector and they squander it on wasteful spending. We don't need those kind of jobs. We can't afford those kind of jobs.
I mean, 2/3 of Americans support putting teachers, firefighters, and cops back to work with federal funds. So what you need to recognize is that those are real jobs in our communities that create purchasing power, that those people walk into local businesses, they buy things, and when companies need to sell things and produce things, that's when the economy is really humming.
From production.
All right,
we need production.
You guys are giving me a heart attack here.
If we just hire more teachers and more
Peter and Ryan, we've got a couple minutes left.
We're not going to get more production.
Bear with me, Peter. I've got to change the topic just very slightly here so we don't get too wild. But part of what Bernanke does is trying to do, and this has to do with the unemployment as well, is there's been these claims out there by a lot of folks that a lot of the private sector, including entrepreneurs, and I'm sure we would all agree that it's good to have small business owners have access to capital. The question is, can we agree that this either helps or hurts entrepreneurialism in the United States by giving small business owners access to basically small business loans? And Peter, we're going to start with you.
they're not giving business access to anything. They're giving Wall Street access to cheap money that they can speculate with. But what we need is savings to have real credit, and we're not getting any of that, because in order to have legitimate credit that is going to go to business, people have to deposit money in banks, and no one's doing that because no one is saving. The Fed has a 0% interest rates, so we're not going to grow the economy. Small business is not going to get credit. All the credit is being diverted by the Fed to the government to finance the deficits and to finance the mortgage market. In fact, the Fed, as its stated goal, is to reflate a housing bubble. The Fed hopes that it could have an economic recovery by printing money and lending it to Americans at ultra-low rates, hoping they'll use it to speculate in the real estate market,
I want to give Ryan a chance here
to
comment, Peter, on this before we go. Ryan, will it or will it not help entrepreneurism in terms of small business owners?
Well, what we need is small businesses in this country because they create 2/3 of jobs, right? So anything that's going to help small businesses get back on their feet and start hiring again, start producing goods, and start selling more products, that's a good thing in my book. I don't think we need to be giving Wall Street cheap cash and devaluing the dollar. They already got bailed out. You know, they're the ones who crashed this economy in the first place. And last time I checked, Wall Street profits are soaring at record levels. What we need right now is a middle class Reconstruction Act. We need to put the middle class back to work. We need a jobs program in this country so that people can afford to put a roof over their head, to provide for their families, and have a little money left over to enjoy life.
The best jobs program is free market capitalism. That's what we need. We need the government to get out of the way. We need the central bank to get out of the way. We're out of time,
but I can safely say that you guys at least agree on part of the discussion. Peter Schiff, thank you so much, as always. A pleasure. And Ryan, great to have you here inside the studio. We're going to certainly have you back again. I don't remember a time when these Fed decisions created so much controversy.